And it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening. Wherever in the world you're watching from, it's Business Morning live on Channels Television. I'm Ladi Williams. Great to have you join us today. Today we'll be talking commodities, looking at Nigeria's trade balance for the first quarter of 2022. But first, let's look at some markets. We see oil prices jumped after EU leaders reached an agreement late yesterday to ban 90% of Russian crude by the end of the year. During Asia hours today, U.S. crude futures for July were up 3.53% to $119.12 a barrel, while Brent crude futures rose 1.87% to $123.95 a barrel. At one point, U.S. crude rose to $119.42 per barrel, a 12-week high, according to data from Refinitiv. Contracts for August also traded higher. WTI crude jumped 3.66% to $116.34 a barrel. It was up nearly about 2% to $119.96 per barrel. The agreement resolves a deadlock after Hungary initially held up talks. Hungary is a major user of Russian oil, and its leader, Viktor Orban, has been on friendly terms with Russia's president, that's Vladimir Putin. We'll keep tracking that oil market to see how it all plays out. But back here, a concession agreement has been signed between Nigerian Customs Service and Trade Modernization Project Limited. The public-private partnership has the Africa Finance Corporation as lead financier and is projected to generate over $176 billion to the federal account in 20 years. The Controller General of the NCS, Colonel Hamid Ali, says the service will be fully digitized and will set the pace for all other African countries to follow. Do take a listen.
It's the signing of the e-Customs concession project, an initiative adopted by the federal government to digitize the processes and procedures of all services of the Nigerian Customs Service. The $3.2 billion e-Customs project is to be financed by the Africa Finance Corporation under a 20-year concession window, and it's expected to quadruple customs' current 210 billion naira monthly revenue collection.
Having gone through all the processes satisfactorily and obtained ICRC full business case certification, the approval of Federal Executive Council was sought and obtained. The final vetting of the concession agreement by the Honorable Minister of Justice and Attorney General of the Federation usher into being what you have just witnessed, the signing of the agreement.
The Comptroller General of the Nigeria Customs Service lists the benefits of the policy as he allays fears of massive sack following the deployment of digital platforms to transact business by the service.
It is going to change the customs entire business process. It's going to put the customs on the best path in terms of doing their business. It will remove all arbitrariness and human mistakes. It is a process that will ease the cost of doing business. It is a process that will also assist those of us who are given the task to manage a much simpler process of managing and monitoring. It's a system that will put stop to every arbitrariness.
The e-Customs project has an ambitious target of generating $176 billion revenue within 20 years. The initiative will help the federal government meet up with its infrastructure challenges and revenue shortfalls.
And now to our first conversation. The value of Nigeria's international trade deficit rose by 175% from $152.94 million in January 2022 to $420.79 million in March 2022, according to data from the Central Bank of Nigeria. The international trade summary on the website shows that the total value of international trade was $28.77 billion in the first quarter of 2022. with imports at $14.77 billion and exported at $14.01 billion, showing a total trade deficit of $764.69 million. To help us make sense of this data, we have Professor Ishola Lawal, Professor of Research Economics at Bowen University, join us on the program. Great to have you. Good morning.
Good morning. Thank you for having me.
Yeah, so looking at these figures, the value of Nigeria's international trade deficit rose by 175%. Quite a big jump there. What is the implication of this?
Well, let's start by saying we have, in every economy, we have three basic economic agents. We have individual households, we have firms, and we have the government. And any happenings in the economy, changes in economies have effect on these three economic agents individually. Now, first, let's start from the government. Government is out to achieve 4 macroeconomic objectives. The first one, full employment, balance of payment stability, price stability, and exchange rate. Now, with deficits in terms of our balance of payment position now that we're experiencing in Nigeria, to have a negative effect on government in achieving our objectives of achieving balance of payment equilibrium. Now, there's a pressure on the government, and these will have effect on other economic agents as well. Let's consider the individual household, especially those households whose consumption is still towards consuming foreign goods. It will have negative effect on them. It will have negative effect on the firm manufacturing sector, especially those ones that are still towards buying raw material, whose raw material depends on the foreign market. Now, the implication is that we are buying more. When you have a deficit balance of payment, what you are saying is that you are buying more of imports than you are exporting. And what this implies that you are paying more than you are earning. So you have a negative effect on your exchange rate, foreign exchange position. And when it affects your foreign exchange position, it will also affect local industry, because especially those ones whose raw material and machineries depends on sourcing resources from the foreign nations. That means you have to look for more dollar to pay for what you are importing. And it will also snowball into unemployment, because those firms will not be able to produce at maximum, and then they have to lay off staffs. And with that one now, it will increase the rate of unemployment in the situation. You agree with me that currently Nigeria has about 33% unemployment rate. With a 3% unemployment rate and inflation about 17%, that's the level of misery index in Nigeria is now about 50%, and that's not good for a growing economy like Nigeria. So it has a very severe negative consequences on the three key economic agents: individual household, the firm, and the government.
Quite interesting, but if a trade deficit continues, for the foreseeable future, how bad can it be for such an economy?
It is not ideal for an economy to continue to have a trade deficit. Some will argue that Americans have been having some trade deficits, but I will agree. I want us to agree. You agree with me that China, which is the headquarters of manufacturing in the world now, has always been on the positive side. And then the implication is that when you're having trade deficits continuously, that means you are outsourcing your job to the outside world. You are having more import. And then it will have negative implication on your local industry, because there will be job costs, and then there will be pressure on your foreign exchange balance. And then it's not healthy for any economy. So the best thing is for you to be at an advantageous position by having a positive, continuous positive that is surplus on your balance of trade.
Right, and what would you say, are the actionable steps to close this deficit and, maybe achieve a surplus at some point?
What do you say?
I said, what would you say are the actionable steps, that can be taken to bridge this deficit, to actually close this gap, and
to correct this,
get a surplus if possible?
We have to be deliberate about it. First, we have to diversify economy. You agree with me that Nigerian economy at the moment is monocultured, heavily dependent on oil. Now, then we have other potential sectors that can drive the economy. We have agriculture, we have the service industry, we have the telecom industry. Now, the first thing is let's diversify our economy. Number two, let's stop being a producing nation, a producer nation, that we're just exporting raw material or raw goods to the foreign country. Let's try our union, have value chain, create value chain along our production line so that by the time we're exporting our final goods, we're going to earn more. For instance, now I'll tell you something now, in the cocoa industry, Ghana, Ivory Coast, and Nigeria, these are the three largest West African producer of cocoa. And in the cocoa windfall, we're able to only maximize less than 5% of the windfall. Compare us with Belgium. Belgium was able to cut out about 11% of the windfall in the cocoa industry. Now compare that with Germany. Germany made $5.14 billion from cocoa, whereas these three West African economies were able to make only 6.5 billion. Three African economies that are major producers of cocoa were able to make less than 5%, whereas this advanced economy that did not plant cocoa, they don't grow cocoa. We are the one that grow cocoa, yet we are not maximized because we are primary producers. We just export this raw material to them. So by the time we do that now, let's create a value chain along the production line. And then also we should be we need productivity and competitiveness. Let our products, whatever we are taking to the external sector, let it be competitive enough for them. And then we need to also work on our inflation differentials, among other things. The first thing, the key thing here is that increase the productivity. And this could be by way of providing incentives like infrastructure that will support productions, among other things.
Right, and globally, a lot of central bankers, are fighting inflation right now, and we've seen, the central bank right here in Nigeria actually raise rates, also trying to tame, rising inflation. But how much of this, plays into, the current inflation numbers we're seeing at this point? Talking about this trade deficit.
Sorry, I can't pick what you said now.
Yeah, I said, globally, countries are fighting, trying to tame inflation at this point. And we've seen, right here, the Central Bank of Nigeria raise rates to also try and, tame inflation. So I'm asking how much of this, trade deficit actually plays into the inflation figures, that we're seeing right now and, outlook, going forward for our inflation rate right here in Nigeria.
Okay, thank you. See, one thing, I think when you're using macroeconomy or macroprudential policy tools, you have to, first of all, it's not a straitjacket thing. You understand the content, the culture, social, economic factor, those things that underlay your own economy. The Western world could try to, beat down inflation by increasing, adjusting the interest rate upward. But in Nigeria, we need to understand the content of our own economy, the structure, the dynamics of our own economy. When governments increase interest rates, it will have negative effects on production. The capacity of manufacturer to borrow loans to support production has been halted. And this will have negative effect on unemployment. And then you agree with me that Nigerians at most buyers who believe in foreign goods. I think what government should do is to provide incentive that will support manufacturing sector rather than increasing rates that will make assessing loan, assessing credit facility to support production difficult for them. I think government should provide windows that will support manufacturing sector so that they will be able to produce. It is what we need now. First, ability to expand our production base. Then we need value reorientation so that Nigeria will patronize made in Nigerian goods. Our taste for foreign goods should be, first of all, addressed, not the issue of increasing rates. When you increase rates remain, I belong to the school of thought that believe that policy is not appropriate. Now, it's not timely for you to increase rate now. That is done elsewhere. It doesn't mean that you should do it this time around. It's not healthy for Nigerian economy now. I believe what government should do now is to provide an enablement that will support manufacturing sector so that they'll be able to access on and then to produce. By that, when they produce more goods in Nigeria, and then the ability to employ, to engage Nigerians, teaming Nigerians about 3% unemployed youth into the production base, which in the long run will increase their capacity to demand as well, create effective demand. That is what government should pursue now, not necessarily increasing rates that will halt the ability to raise funds.
Quite interesting, and we've seen that debate, Ray John, about the inflation we're seeing right now and how, raising rates actually impacts that. But, with the volatility in the FX market, the dollar is traded around over 600 naira to the dollar in the parallel market, making imports, more expensive. Is there any silver lining in this?
Yeah, there's hope for us in this whole thing. I think the first thing is if we take deliberate steps to address the issue. I believe that when you have deficits, surplus, deficit balance of trade, in the short run, there could be some distortion, but I believe we'll maximize it. We'll be able to, achieve the best out of it. But one thing I want us to first of all do as economists, first of all have actually convergence, so that the gap between the parallel market and the official window should be narrowed, and that will aid it should be narrowed, and then the gap between the exchange rate and the parallel market and the official window should be narrowed, and that one is going to be a plus for us. And if we have a value orientation so that we start consuming what is made in Nigeria, it will help us. And also, I believe that if the government will be bold enough to address the fiscal challenge, insecurity in the nation, so that it will support production. Because one of the challenges of production in Nigeria is insecurity. Farmer can't go to farm, they can't produce. Even when you want to produce, you're not sure of what's going to be. Investors, insecurity scare away investors. So I believe that, with this exchange rate volatility, it could be a win-win for us if we can use it to maximize, attract foreign investors into Nigeria, and then it's going to be a win-win thing for Nigeria. Rather than it's not a total loss out, but if we can maximize it, use it in such a way that will make our economy attractive for foreign investors to bring in their money to come and invest in Nigeria. Nigerians are buyers. We have the market. Let's maximize this. Thank you, sir.
Right, and talking about intervention, we've seen the CBN come up with a couple of interventions, but at this stage we're at right now, what sectors do you think should be the focus when it comes to some of these funding interventions?
Sorry, I hardly pick what you said.
Okay, I said that right now we've seen the CBN come up with a couple of interventions for the agric sector, but looking at the situation of things right now with the war in Ukraine, rising inflation, what sectors do you think should get all the attention now when it comes to funding? What sectors should be prioritized?
Now, given the Nigerian teeming population, we have the youth, which is a very big advantage to Nigeria. I believe, and then the agricultural sector. We have arable land. If the government can, incentivize the agricultural sector, so that people we maximize the potential there, the value chain around the agricultural sector will improve on it, so that people can maximize it. I think the agri sector, Nigerian, we have we have the population, so it's very key if we develop the agri sector. And then we can now talk about infrastructure.
Right. Well, okay. All right, Professor Shola, Professor of Research Economics, Bowen University. Thank you so much for giving us your insight on Business Morning today.
Thank you for having me.
Okay, so after the break, Commodities Market Update is next. Do stay with us. This is Business Morning. Happening in the commodities market, we have Dumebi Yeke now join us on the program. Great to have you, Dumebi.
Thank you so much.
Yeah, well, we see oil prices still a lot of volatility, in that market, and it seems Europe now has a plan, when it comes to the embargo on Russian oil and gas, even though we know it's not that easy, but how is that looking right now?
So we have to start with the fact that that's not the only thing affecting oil prices right now. So there are a couple of things. So on the supply side, we have the fact that oil supply is really tight. OPEC members, OPEC producing countries, quite a number of them are not meeting up with their quota, and so that's affecting supply of oil to the global market. And then we now have this conversation with the EU trying to institute its ban on Russian gas. So there's somewhat of a deadlock there. I think Hungary or the Netherlands are trying at still a bit fuzzy about that, making that decision, because
Hungary have
yes,
a big butt there.
Exactly. So there's a huge question mark on that. So that is stalling the embargo on Russian oil imports. And apart from that, the other countries are also looking at what's happening with their domestic prices of energy, and how the EU would plan to, or how the EU plans to make up for the shortfall if this ban pulls through. So the market is weighing that as well on the supply side. Then on the demand side, we're looking at the fact that China has already, is beginning to reopen its economy. Shanghai, in Shanghai, which is like its commercial hub, manufacturers are going back to, they're going back to the factory, so businesses are reopening, the lockdown restrictions are easing, and that is increasing prospects for Chinese demand for oil. And then we also move to the fact that the US as well, summer is coming up, and then there's usually an increase in demand for there's usually an increase in demand for energy or gasoline, basically, which is a refined product of crude oil during summer. So, and demand is not looking like it's going to, dissipate at any point in time. People are really looking forward to their summer holiday, and, we're seeing an increase, if anything. And the price of a liter of gasoline is already high. It's trading at about like $4 to a gallon right now. And JP Morgan analysts are saying that it could increase because of this summer demand and shortfall in supply to about $6 per gallon. So that we're looking at that impact as well. So it's a combination of things, both on the supply side and the demand side, that's pushing up Brent prices.
It's basically the same suspects.
Exactly,
we've had since the beginning of the year.
Exactly.
But it seems at the end of the day, oil prices just want to go up. I
think with the factors in place, because what's happening is the fact that it's just basically supply-demand dynamics, right? There's an increase in demand. There's also a significant decline in supply, and that's keeping oil prices above the $100 benchmark. If you even look at the Intercontinental Exchange, where you have the future contracts for oil, you see that for July, oil prices are still above about $122 per barrel. So meaning that the markets actually expect oil prices to increase further from 120. But when we go, when you look at September 2022, you go into next year, and we see that the markets actually expect oil prices to begin to decline or soften.
We're looking for that peak right now.
So so it's looking like oil prices could soften in the future. But it all still depends on what happens today and how the markets, weigh the decisions or weigh the events that are happening, and then that could possibly change the contract for September, December, and even next year.
Right. It'll be interesting to see how much oil, closes the
year at.
I hope it don't be anything too drastic. Talking about price.
Yeah.
Well, I see exports of Nigerian Focados crude oil is expected to rise in July. What's pushing that?
So that's basically a projection of what's going to be happening at the Focados terminal. So there's expectations that oil production could increase from that terminal to about 265,000 barrels per day. But then from the Boni side, it's actually expected to decline. But when we look at the increase from the expected increase in Focados oil, that's about like 18,000 barrels, increase compared to the decline that would be in the Boni line. So we could say that the Focados oil could offset the decline from the Boni terminal. It's somewhat of good news, but when we look at the potential of that terminal, which is about 400,000 barrels per day, that was still, you know, experiencing a huge shortfall in that area. And then overall, we look at the fact that when we combine the output from all the terminals that Nigeria has, we're still experiencing a huge shortfall from our potential, from the budget benchmark and the OPEC quota. So when we situate the numbers, right now Nigeria's oil production is about 1.3 million barrels per day, and that is about 23% below our OPEC quota of 1.7, and then that's also lower than our downward revised 2022 oil production budget benchmark of 1.6, and that's also and what we're producing currently is also very much lower than our our potential of 2 million barrels per day. So everything altogether, even though this is somewhat of a green light as to whether Nigeria will be able to produce more, we can't on the larger picture, on the bigger picture, we're seeing that it's still not sufficient to, you know, put us where we should be in terms of meeting our OPEC quota, in terms of meeting our budget benchmark, or even our potential.
Talking about where we should be, let's say, you know, something magical happens and we actually hit that 2 million barrels. Is it all going to be all well and good? I mean, yeah, to an extent, yeah, of course, because Nigeria is more sensitive to changes in production than prices, and that's because we're an oil exporting country. So the more you produce, the more money you can make. And if we look at what's happening in the global economy, oil prices are higher. So expectation is that the more you can sell, the more profit you would make. So, but what's happening now is we're earning some money from the little that we're selling to the global economy because of higher oil prices. We're making some money, but when you situate it properly with the fact that we're not producing as much, so we're not selling as much, so we're really not making as much. And even though oil prices are about $120 per barrel, Nigeria still cannot break even. I remember about last year or last 2 years, S&P Global released a document saying that for Nigeria to actually break even in the global market, or for Nigeria to break even, all prices have to be about 130 to 135 barrels per day. I remember that I mentioned that for the future, even at this production level. So I remember that I mentioned that for the future contracts, the highest that we're seeing, which is for July, we're seeing that the highest that oil prices will probably reach would be $122 per barrel. So even if Nigeria was to make, if we're to produce about 2 million barrels per day, it would be good news. It would be substantial revenue. But remember that we need oil prices to be about 130 to 135 to completely break even, to have so much money that we can do a lot more in the economy. Yeah. Well, some have said, you know, it's spending problem and maybe not a you know, revenue problem, but well, that's for another conversation. But let's look at the naira now. It appreciates about 608 naira to the dollar, you know, as delegates return. You know, it's all about delegates right now, all over social media.
Yes, it's all about that. Looking at what's happening in the forex space, so scarcity is still a big deal. Banks right now, commercial banks are really rationing the dollars that they have. A lot of banks have released, sent emails to their clients, telling people that, oh, you give us a window, a 30-day window, that's about a month, to process PTA, to process your BTA, to process school fees payment, to process travel. So, and that's a really long time. And for even for collecting your PTA or BTA, some banks are saying you have to give us a 14-day notice. Apply 2 weeks before your proposed date of travel to be able to get that. And the huge impact there is just basically stemming from the fact that dollar is scarce. Now, Nigeria has like 4 major sources of forex. The first is foreign portfolio investments. Then we also have diaspora remittances. Then we have oil exports, and then we have proceeds from non-oil exports and oil exports. Now, when we look at these 4 components, oil exports are not, they're not buoyant right now. Revenue from oil exports are not buoyant. If you even look at the foreign trade report, sorry, the GDP report rather, you see that the contribution of oil to Nigeria's GDP right now has significantly declined.
Yeah, quite a massive
then when we
decline,
look at the non-oil exports as well, yes, maybe things are happening there to increase revenue, but it's still not sufficient because there are lingering structural bottlenecks affecting production in major sectors that could be doing a lot, and that's like agri, manufacturing and trade. Then you look at what's happening with diaspora remittances. Our major sources of diaspora remittances from the US, from the UK, those countries are experiencing a decline in employment levels. Those countries are experiencing high inflation. They're also experiencing a level of slow growth and things,
squeeze.
yeah, a massive squeeze as well. So the family member that would have sent some money down and that would account for something in our foreign reserves is trying to meet up with his own domestic demand, domestic, his own household responsibilities before thinking of sending some pounds or some dollars back home. So that is already falling as well. Then you look at foreign portfolio investments. Let us isolate the current hike in interest rates. Foreign portfolio investments have been very wobbly. These investors, to keep them in, you need to really incentivize them. And what we've been seeing, interest rates are low compared to the level of inflation. So there's a negative sentiment from investors as well in that area. So when we look at these four components, they are all declining. And what does that mean? It simply means that forex inflows are also going to decline. And what does that mean? It means that if our forex inflows are declining, our foreign reserves are also going to be low. And the CBN draws down massively from this pool of forex inflows to stabilize the naira. And we've seen that play out. Average daily turnover at the official window has been declining simply because there's not just enough forex to boost to stabilize the naira. Rationing is taking place. And then to cap it all up, there is the increase in forex demand due to election spending. If you walk into a commercial bank today, I mean, during the primaries, when the election primaries, I'm not sure if it was PDP or APC, before then, I think like a week before, if you walked into a bank, oh, I need dollars for some little transaction, they'll tell you, oh, the elections are happening, you cannot get dollars right now, please come back. So that's really happening. So those are the factors that are really affecting Nigeria's forex reserves or our level of forex inflows and the ability of the CBN to defend the naira. And that's why I was saying that happened at the parallel market.
Is it peaking, at this point, or can we expect further rise going forward?
For the value of the naira?
Exactly, in the parallel market.
I mean, speculative activities are really taking place there because the expectation, there's something, we have inflation expectations. There's also something that happens with the psychology of investors, business owners, and even consumers when it comes to foreign exchange as well. Once they expect that foreign exchange at the official window will be low, there's going to be an increase in demand in the parallel market. And that's because they want to stock up on enough forex as they can get now to be able to do what they need to do in the future.
Right.
So if they go to if they feel or they speculate or they think that forex is going to be low at the official window, they would run to the parallel market. And remember, dollar is also scarce. So the more the increase in demand for forex at that market, the more the value of the naira would depreciate.
Quite interesting. Well, we've seen the MPC raise rates at the last meeting, and now there are projections for inflation rate for May. How are you seeing that? What's your projection this time?
I mean, it's still the same thing. We expect inflation to still be high, and it's on the back of, all the various things that are happening. Nigeria right now is extremely vulnerable to the global happenings. And on the global space, where we import a lot of commodities, wheat, sugar, palm oil, we import a lot of commodities.
Quite a lot.
Quite a lot. Countries are beginning to adopt a protectionist approach. And what does that mean? I would rather serve my domestic economy to cool inflation, cool domestic prices before selling. Indonesia has banned palm oil, crude and refined palm oil exports. India has banned wheat exports and have put a cap on sugar exports. And these countries are one of the top exporting countries for these various commodities. Malaysia has banned poultry export. chicken. So, and when things like this begin to happen, there's going to probably be like a response from other countries as well. Like, oh, okay, this is happening. Oh, I think I should, you know, do the same. My domestic prices are higher, so I'll rather, you know, try to cool domestic prices than sell to the global economy, and that will continue to increase the supply shocks in the global market and keep prices high. Now, for a country like Nigeria that spends about like $2 billion on wheat imports, that definitely would increase our import bill on these commodities and have an impact on imported inflation, which would also have an impact on food inflation. And domestic prices for food as well are also high. So we're also going to see that ripple effect. Now, on the energy price aspect, we already know that energy prices are going to still be high. I mentioned the July 2022 contract. So, so the market expects oil prices to still remain bullish, at least above $120 per barrel in the meantime. And if that is going to happen, we'll see the ripple effect, because Nigeria imports refined petroleum products, petrol, diesel, jet fuel, kerosene. So the price of these commodities would likely increase. And particularly for PMS, the government, well, with the government going to subsidize, and now oil prices are about 120. Yeah, exactly. And for in our budget, we made provision for 4 trillion on fuel subsidies, and the expectation now is that fuel subsidies could increase to 6 trillion naira. That's a very big bump. So definitely there's going to be a ripple effect on that. The NNPC already for the first 3 months of the year remitted nothing to the Federation account, 0, and that's probably going to continue, because they're going to keep trying to subsidize fuel. And if that happens, there's less revenue coming to the Federation account, less revenue for state government. So it's just going to continue.
Bleak outlook there. So much to learn from Aramco. You know, seeing what they've done with the bullish run. Thank you so much, Dumebi. It's always great having you on the program.
Thank you so much.
All right, so we'll take a moment now to stay with us. All right, now let's head on to the markets. We have Willie Bong right there. Will, I said it yesterday, and you said maybe not. Profit taking happened.
Yeah, leave those profit takers. You know, like I said, it's just temporary. You know, the market is like that. It's going to rebound soon. Watch and see. We're going to start off with the bonds market. You know, we've seen some bearish movements, as you know, coming from last week's, you know, interest rate hike. The bond market opened yesterday, still on an active note. We saw some buying interest on the 2032, 2042, and 2036 papers there. Average yield dropped by about 1 basis point from 11.22% to 11.21%. A lot of buy interest there, you know, but relatively, you know, not much change in the average yield. Treasury bills started still same thing on very bearishness, very quiet there yesterday, as there was little or no activity in the market amid the thin level of system liquidity. You know, as trading day progressed, we observed some mixed sentiments across the mid to long end of the curve, with minimal trades consummated by the market close. Now, consequently, we saw closing rates remained unchanged there from opening levels, and despite the OMO maturity of about 65 billion naira scheduled to hit the system today, market players are expected to continue to trade cautiously. However, we saw some interest in long-term OMO maturities yesterday. Interest rates, however, remained mostly unchanged across the board. Outlook, we expect some activities in the market as a result of the FAC inflow. We expect to see interest on short-term bonds as well as treasury bills to continue to, you know, due to favorable upward trend in rates. Activities at the equities market, we're going to go straight to the equities market now, and we see that activities there yesterday was not, you know, as Ladi, as you mentioned, was a bit bearish, 0.58%. Profit takers, you know, MTN Nigeria. We were seeing people trying to take profit from MTN, you know, and down about 3% yesterday. It was 2.93%, I think, down. And then lost about 7 naira off his share price, 230 naira to close. But we're going to talk about that with the analyst after the break.
Right after the break. Do stay with us. You're still watching Business Morning. We'll drill back on the markets after this break. All right, now we're still looking at the markets, and we have Will about to give us more information on how it closed yesterday.
Yes, as I was saying yesterday, the market was really down. We saw bearish trend, 53,772 points as well. We're still at the equities market, 28 trillion naira market capitalization, still locking that in. And year-to-date and month-to-date gains are still in positive territory. Hopefully, that will continue for the rest of the year, hopefully. And then we saw volume and value. We saw huge jumps in that segment. Volume rose significantly. Value was off the charts. And then we saw deals. What the deals was not very didn't perform well as much as volume and value. But we saw sectors, consumer goods, industrial goods, and banking were down yesterday. Most of the tier 1 banks didn't do well. UBA was down, as well as GTCO. Now we saw consumer goods, Honeywell Flour was down. So many of them, the big names were down in that counter. Industrial goods, Lafarge doing well there. That really brought that sector down. Insurance, AXA Mansard was a winner there. You actually lifted that market. And then we saw oil and gas. O did its thing there again, and we saw a big block for the banking sector. We saw a big block of transactions going on in one of the banks, not a tier 1 bank. But we're going to bring in Phil Anegbe, research analyst, Cardinal Stone Securities, to give us more insights on that. Good morning, Phil.
Yeah, good morning, Will.
Now, we saw huge jumps. It's good to have you too. We saw huge jumps in volume and value yesterday. Now, I'm thinking it's as a result of the block divestment in Union Bank. What's going on there? Could you give us a bit of
yesterday was a very historic day. We saw Titan Trust Bank actually execute its acquisition of Union Bank. I think it purchased about 93.4% of the bank in an off-market deal. And that transaction is the biggest acquisition deal we've seen in recent years. I think it's biggest in terms of size compared to what was paid for Dangote Flour in the not too distant or far away acquisition, and even dwarfed what NIPCO paid for Mobile NL shares. So it was a really remarkable day in the market. So what's expected now is that we may see some sort of tender offer for minority shares, given that the free float has really narrowed, right? And the tender offer may be executed at the off-market price that we saw yesterday of about 7 naira, which is about 12% premium relative to where the stock closed yesterday. I think the price executed yesterday was also about 38% higher than the price in the market when the deal was first announced. So really historic day.
Okay, it was good to have that. Thanks for sharing that information. Now, we also saw that Flour Mills posted their full year 2021-2022 financial report yesterday. They have locked in the two. They're now a 1 trillion naira revenue company. What's going on? Tell us what's going on with Flour Mills, especially their subsidiary Honeywell Flour didn't do so well. But tell us about Flour Mills' uptick in revenue.
Yeah, really interesting results for Flour Mill. It joined the league of companies with revenue in excess of 1 trillion with its full year result that was announced. So decent revenue numbers, historical milestone. However, there were material margin pressures as expected because its cost, I think cost of goods sold was also over 1 trillion, and that more or less dragged margins across board. And the cost pressures came as a result of commodity price increases across the globe, particularly for commodities like raw sugar and wheat. The company imports almost the entire wheat that they use in production. So that more or less dragged performance. And I think there was also material pressures from the finance expense leg. So those sort of actually dragged the performance from a margin standpoint. However, the company was able to manage a dividend of 2.15 naira despite reporting a moderation in cost. And that dividend, I think, at market price is about it's close to a yield of about 5.7%.
So how do you? I'm going to just jump in there. How do you think Flour Mill is going to manage costs? Cost of goods sold, cost of sales at this moment, and to probably drive.
I think that the company is moving in the right direction with its backward integration efforts. It's important to note that the animal feeds business reported expansion in margins, and that was because of backward integration. So what we think that the company needs to do is actually expand these backward integration efforts and more or less try to expedite some of the processes so that in the near to medium term, there will be a bit more stability in terms of its earnings going forward. So we think they are in the right direction. What they just need to do more or less is up the ante, basically.
Okay, so we saw the market sentiment report yesterday. Buy was about 10% and the money flow index was about 47.08% down. What are you expecting? What's your outlook for the rest of the week? Is it going to keep going down? Quick one.
Yeah, we think that we are likely to still see some sort of bearish sentiment, particularly in names that have rallied strongly before the MPC decision was made. So there are still a number of offers that are still hanging in those spaces. So that may continue to put downward pressure. But then there will still be bargain hunting opportunities in fundamentally sound stock. Because the sell-offs, what it does basically is to present entry opportunities for investors, particularly those who missed out on the first rally. Particularly in the banking name, see scope for material improvement in performance in the second half, given higher interest rates.
Okay. Thank you so much, Phil Anegbe, research analyst at Cardinal Stone Securities. Thank you for joining us on the program. So, Ladi, that's all we have for the market. We are expecting a rebound. Don't worry.
Yeah.
Fingers crossed.
Maybe the call is bargain hunters for today.
Yes.
All right, Will, thank you so much.
No worries.
All right, now let's take a look at other markets. We see the crypto market is getting some kind of relief rally. We've seen the fear greed index also ease from extreme fear, but still in extreme fear, but by 16 points this morning. It's still extreme fear, but it was better than yesterday, about 10 points yesterday. And we see the market cap at $1.31 trillion. That's up about 3.76%. And we see volume traded up about 54.12%, with Bitcoin trying to get to a fresh increase above that 30,500 resistance zone. We see price of Bitcoin this morning, $31,619. That's up about 3.57%. All right, let's bring in Gilbert Jopata now, digital market analyst. Hello, Gilbert. Good morning.
Yeah, good morning, Mr. Ladi.
Yeah, you sound excited. I'm sure you're enjoying that relief rally. But some are saying Bitcoin is not out of the woods yet. What do you think?
I agree with them. It's not. The market is still ranging. So technically, we haven't left the position which we're at.
Still in those in that position, right?
Yes, technically we are still in a range-bound position. We haven't broken below it, neither have we broken out of that structure. So technically, I actually think everything is still the same way it has been. But there is always a strategy to trade the market in whatever direction the market takes, whether it goes, whether we are in a bull market or we are in a bear market. Like the old saying always go, if you can't control the direction of the wind, adjust yourself. We can't control the direction of the market, but there are techniques and strategies that we could use as investors or traders to still remain profitable. You know, like traders can always take short position since the market will always go down. We'll have more downside than upside. So traders can always take short position. This is taking a sell position by speculating on the price, on price is falling and making profit as the price go down. So I like calling this the market is moaning in reverse because you still make money as the market goes down. While on the spot, you know, the market don't go down in a straight line. The same way we are in a bull market, the market wouldn't still go up in a straight line. So even if we remain in a bear market, we are still going to have micro short-term upside. So what spot traders can still do is take advantage of this by finding a good entry position, taking profit, and managing risk. On the other hand, investors are actually having a great time, investors that are prepared, because in a bear market, it's easier to spot weak projects and founders to avoid, and it's even easier to spot battle-tested founders, projects, and great assets to buy at discounted rates. These are rates you would have only dreamt of. But dollar cost averaging is your friend. Don't go all in. Quantitatively ease yourself into the market. This is what investors will do while they look at projects like Bitcoin, because, you know, during crises, large corporations always look for store value, and Bitcoin is always there. Most persons will also look out for other large market cap currencies that have been battle tested.
Right.
But I think the large attention should only be paid to other cryptocurrencies once we have capitulated. In a moment like this, you want to be sure you're putting your wealth or storing your wealth in solid projects. I'm also a fan of dividend investing. So solid crypto that pay dividends is also a great place to look at.
Yeah, most of those are staking projects. But Gilbert, this is Bitcoin's time to shine. That argument about, Bitcoin being a hedge, against inflation, we've not seen that, happen yet. And we're still seeing inflation, rage on globally. But maybe somehow Bitcoin might show, that attribute all of you talk about. What do you think?
Okay. But hedging is an investment strategy. So if you are coming to use Bitcoin as a hedge, you need to have a strategy for that.
Right.
But you don't just buy because you think it's a hedge. You need to have a hedging strategy. So
a hedging strategy.
Investors need to have an investment strategy that fits your investment goals and plans. So if you're coming in to use Bitcoin as a hedge, you need an investment strategy that fits such investment goal at the end of the day.
Right. You don't just jump in thinking it's going to hedge, against inflation just like that. Thank you so much, Gilbert. It's always great to talk to
you. The pleasure is mine, Mr. Lack.
All right. Thank you so much. Okay, now we look at the top alts by market cap. We see it's mostly green on that counter with Cardano, the biggest mover there. That's up about 26.51%. And we see eCash up 5.11%. And XRP there trying to get back above that 40 cents range, trading up about 5.03%. All right, that's it for the crypto market. We're seeing that rebound today. See how the market closes after trading hours today. All right, that's a wrap on the program. Thank you so much for watching. Don't forget to join us on Business Incorporated at 1:30 for more updates and developments in the world of business. Thank you for watching. I'm Ladi Williams. Bye for now.